Hello everybody, it's about 7:30 Tuesday, and it's just after the holiday. This is my first video of September. So the last one was on August 31st. I got a lot of updates for you guys today, and the last time I had my video was the end of the month video of August, showing you what kind of the ending month stats and what happened. This month I have quite a bit to talk about. This video will probably be a good 15 to 30 minutes long. And I'm now managing managing and trading, advising, all the above, $194,000. So it used to be, in my last video, I think I said it was about 180 was the maximum that I was doing at the end of August. That has recently changed. I've been given more funds from MaverickFX, and also have made more profit as well. So I'll get into that a little bit later. So let's talk about the trades that I've had since August 31st. Now, you can see that I've had some closed baskets. So you can see the basket from August 31st, that was a short position, and basket, and this moved down in a big way. And then I had a couple of buy or long baskets that happened after. So you can see the first trade here, the inside candle set up, and then you can see that it didn't quite bounce there. So I entered again 20 pips later, 20 pips. So I had a basket of 4 trades that were closed out eventually here. If you look at the basket closely, you'll see that trade 1 and trade 2 were close to closing out here at this level. And then trade 3, when trade 3 went in, again, it was very close to closing out at this level again. Just not quite enough pips. It was real close, but I just had to wait a little bit later. Trade 4, and then that is when I finally, it kept hitting that level up there, and it hit it 3 times or near it, and then eventually my 4th basket did hit profit here before it continued to push back on the downside. Alright, so this level down here was being hit multiple times. You can say that it was pretty close to the same level. I mean, it's slightly lower each time, but it kept finding a support near that area. It's because it was the 161, or near the 161 level, and so the market was trying to find a support there, and it did find it a couple times. It just wasn't a huge pullback. The biggest pullback area was right here, but it wasn't massive. But it was enough for me to get out of the trade of my long positions, though. All right, so the second basket here was on the September 1st. This one was a nice inside candle setup. I thought that this was a really good area for a push up, and the reason why is because it kind of included both the whole numbers. It was the whole number at 161. It was real close to that. The half number at 165, 1.665, and also it was really close to the 1.6 level because of this pretty massive indecisive candle. Right after the indecisive candle was a nice strong inside candle, bullish inside candle. So I thought there was a really good potential there for a bounce up. And the reason why I thought this was good potential is because after such a big move on the downside on the pound Canadian dollar, usually there is a better, stronger, more powerful pullback, and the pullback here was just not big enough. So I was thinking that it was definitely in store with how much movement we've had in that past, and this since August 31st. There was a good pullback, a larger pullback in store for the pound Canadian dollar. And it didn't happen. It continued to push back down slowly during the course of Friday last week, and I entered more positions and ended up having four positions open on the long side. And then the nice gap. I had a very positive gap. It was about a 45 pip gap, one of the largest I've seen in quite a few months on the pound Canadian dollar. And it caused me to close out my trades in a nice profit. Now, typically, guys, I close out my trades in a $4 to $5 mark on this account, at least. So this is the small $563 account. Remember that I'm managing accounts as large as almost $130,000. So I like to show the trades on this account just because they're here right on my desktop and not on a VPS server like all the other accounts are, which I'll show in a second. So you can see that this was an $11 profit on this trade. So this was double. I ended up taking double because of the positive gap. Now you might ask, well, what if it was a negative gap? What if it jumped, much farther down by 45 pips? Well, then I would have looked to enter the market again and looked for a pullback on the upside. But sometimes the market will go in your favor as long as you're ready for it. And I was ready for this to have a decent recovery after the push down, and it just happened to be with the opening of the weekend gap. So it pushed back down. Usually the gap is covered in the beginning hours of the trading session. So if there's a jump up, it will typically go on the downside to recover the gap. And a lot of traders actually trade that gap. And then it continued on the upside, that pullback that I was mentioning. So that pullback did happen. It was this much smaller pullback. The price and the market liquidity was quite low in this area, especially for the pound Canadian dollar in this area. Eventually it did pick back up, but it caused me to find a support area up here, a resistance, and a inside candle setup as well, with this very small, weak inside candle setup, but it was good enough for me to take the position. Now this trade was probably, in my opinion, the worst one. Now you guys might be thinking that it looks like the best trade because you would think, oh well, it's with the trend, it's with the downtrend, right? Well, I was thinking that since this has moved down so much, and a good 200 or so pips at this point, that this was probably not the smartest trade, because if the longer something moves down, the more likely it is to bounce up or to have a pullback. And yeah, this is a decent place to enter because you could say that this is on the pullback from this support level to this resistance. But if you look at the pips in between, you'll see that there is only a good 60 or so pips in between. And usually I don't take positions when they're like that, when there's not a lot of pips from the swing level to the bottom support to the top resistance, or the swing levels here, and there wasn't. So I was definitely prepared for this to enter multiple times, so to have multiple sell orders, 2, 3, 4 potentially, in the hopes that I would have some kind of recovery. That didn't happen, and it ended up pushing farther down. Now my analysis before this trade entered, when this was starting to creep up on the upside, was that a good area of resistance, if broken, would continue, is the 161 level. So up here, 161. And you can see that, and I even said this on my thread at Forex Factory, that I want to see the price break above the 161 level before this would continue another 50 or so pips to the 1.615 level, or near that level. It never broke. It held right there at that whole number, and it continued shooting back down. Now my idea for support here was a 1.615, so near the 1.615 level, which was down in here, that there might be a place of support where the pound CAD might find support and then shoot up. And then my last analysis was the 1.6000 level. So the whole number down there was more powerful than the half number here, but this whole number I was thinking that could potentially hold. And then that's the biggest opportunity for a large pullback. I do think that the support down here could at least retest this 161 level again, but I do think it will break at this point. It's been a long time since almost a week now since the pound Canadian dollar has had a good pullback, so I think that it's time for this to potentially break through. It could hit this level again. I mean, it could hit that same level and then bounce back down and continue the trend and bounce in between, like a kind of a ranging market before it really decides. Again, guys, this is just analysis. This analysis is not very valuable. and because the market's going to do what it wants to do, there's going to be news statements that come out, some fundamental or political news statements that come out that really drive the price, and anything can change at that point. Now this is just the technical analysis side. And technical is usually obeyed a little bit more if there's not a lot of news that's been coming out, and there hasn't been this week. So far, there hasn't been a lot of news that's been coming out, and so technical levels typically will hold more when that's the case. So that's what's happening with the pound Canadian dollar, and I suggest that you guys do some similar analysis on the pairs that you're trading to help guide you, talk yourself through what's happening in the market and what trades would potentially be smarter than others. And in this case, I knew that this was maybe not the best setup, but it was still good enough for me to actually take the position. I was very much prepared for going in on a basket on this setup, considering the circumstances. All right, so let's go into more of the accounts here, and here is my. This is the interactive brokers, so this is with MaverickFX. And so I'm still with MaverickFX, and you can see that this is what the account looks like here. So this is a demo account. You can't really see it very well. I can't draw on the screen. But up here it says that it's a demo account. And the demo account is copying trades with, through a bridge to my interactive brokers account, which they don't offer MT for, and I've said this before, but right now the account is displaying $36,000, so $36,609. And if you guys remember, last time it showed 24,000, so they actually upgraded me at 12,000 at the proprietary firm MaverickFX. And then my next level should be anywhere from an upgrade to from 10 to 20,000. Now it depends on how much I have in the account at that point. Currently, I have 6,000 in the account at Maverick. And they've told me that they want me to have about 20% of the account of their portion. So they have 30,000 and I have 6. They want me to have 20% of their 30,000 in there to cover potential losses or potential drawdown, to minimize the company's risk. Yeah, it's unfortunate that that's the case, and I'm dealing with it right now. Doesn't mean that I'm going to stay with Maverick in the longer term, but so far they have kept to their word, and they do continue to increase their account size. 36,000, and I may have to add some funds from another account over into Maverick if I want a more substantial upgrade for the next time that is available, which would be in November 1st. So this may be upgraded then. Now this is more substantial though, this account size. I should be able to bring in maybe a monthly profit potentially in the 1,500 area, 12 to 1,500 from that, and that's a lot more substantial than what I had last month at Maverick, which was only about 400. I think it was about $400 is what I took away. So 400 compared to 1,500 is a pretty substantial difference. So that's why I'm continuing with Maverick right now, is because the account size is larger, and I will see some better profit potential from trading with them. Okay, so the other accounts are. I moved an account over to Trader's Way. You can see that this is a live account. So this is a live account. You can see live, if you guys are wondering, it's right up there. And this is a $10,000. So I moved my Oanda account over to Trader's Way. The reason why I did this is to try to help. I guess with the income that's coming in. So Maverick, I'll have a potential of about $1,200, maybe $1,500. And if I have an account at Trader's Way, I can actually trade this account much higher because of the leverage. So I'm using a 1,000-to-1 leverage, which I don't really need. I actually, with how I'm trading right now, I only need about 200-to-1 leverage to trade this account, but I just took the 1,000 because it's there, and I'm trading this account like it's 20K. So what that looks like, so it's like $20,000. As you can see, it's only 10,000, but I'm trading it like it's 20. So that means that my profit each month should be in the 10, actually 15 to potentially 20% mark for the month. So that's a pretty substantial profit. So I could actually see a potentially $2,000 gain on this account after the month's over. And it's because I'm at Trader's Wage. So what does that mean for the risk when trading it like this? That means that I'm actually going to see a very similar risk, and I'll trade this just like I do on my Oanda accounts. So this is technically about 2 times more the risk, I believe. So my LMFX account. So let me get this straight here. So this LMFX account is trading at 1 times the risk. So I guess you could say double the amount of my Oanda accounts. The reason why is because this account also has a higher leverage, and I'm allowed to do that. But the account size is still pretty small. And so this is trading at double the risk. And so this account at Trader's Way is actually trading at 2 times the risk. So it's like it's $20,000, and you can see that what kind of risk is involved in that. So yeah, 15 to 20% profits, but I'm also have a potential cutoff. So a cutoff of my losses is going to be the same as it is at the at Oanda, and so that's going to be about 20% as well. So your losses have to make sense with your average monthly profit as well. So my monthly loss potential is 15 to 20%, while my monthly profit is also about the same. And so I understand that I could have a 20% drawdown or potentially a 20% loss. So this 8,000 to 10,000 could be 8,000 if I happen to have a loss this month. I'm okay with that. I understand that that is how this will work, and as long as I understand that and I know the risks involved, I'm okay with taking trades at Trader's Way in this way. Now, I don't recommend risking any more than that. It just doesn't make sense to risk more than 20 to 25% of your account in Forex trading. Most people understand that under 30% is tolerable, that if you can risk under 30%, then that's okay in the trading world. But when it comes to like the very professional traders, they usually will try to stay in the 15 to maximum 20% range, and that's where I'm trying to stay in. So things are a bit more controlled. So I'm really happy with the opportunity here to make 15 to 20% because of Trader's Way and the 1,000 to 1 leverage. But we'll see how things pan out. So far, I've come out with a $100 profit on the account. So things were working well, and that's the same position that my Oanda account and my LMFX account took, was the short position on the pound Canadian dollar. Now that gave me $100 profit, and so that's a good 1% gain on that account. I'll put this account up on my FX book pretty soon, probably sometime this week. All right, so here is the LMFX account. You can see that here, and there's no trades on that one as well. And then here is the almost $129,000 account that I'm advising for Robert. And you can see that it has recently only had a 2% drawdown, so it's been really quite low in the past month. No open trades, but you can see also the same position taken here on the pound Canadian dollar. And all the same buy positions or long positions were taken as well. So all the accounts look very similar, and things are going very smoothly. So let me show you the stats there before we move on. All right, so 90% total profit on the LMFX account, and 2.94% this week because of that huge gap that I've had over the weekend that I recently showed you. So things are going smoothly here, and so far a very good week and also a really good month. And it's only been the first week, not even the first week yet. All right, this is the Robert account, and this one has, let me just make sure that this is updated. And then also my other friend Jared's account. So this is, yep, it's updated. And I have this week at a 0.62% profit, which is 793, and then for the month, almost a percent so far in the first week. So it's been a really good month so far. I think that it's shaping up to be maybe a 3.5 to 4% month this month. So we'll see if that pans out. Be nice to have another 5% month, but you know I'm just taking it as it is, and I'm happy with any profit. If it's a 0.5%, I'm still happy with that because it means I profited the month, and I'm not complaining about that. Okay, so very smooth on this as well. And then my buddy Jared, he's trading his account slightly, and you can see that the big difference here. He took a position himself, and it ended up working out very well. So I might stop updating a lot on this account because since he's doing some partial trading on it, but technically my expert advisor is still managing his funds here, and it's about $20,000, so it's pretty close to the 20,000 mark. But overall, it is running the account probably about 95% of the time. He's taking a couple of trades himself as well. All right, so that is for the update today. I don't know how much time I've taken so far, so sorry it took about 20 minutes to do the update. But what I wanted to get into next is the thread here on Forex Factory. Now, if you guys look at the previous thread, a couple of traders, or one in particular, took a position. I'm going to talk about that position a little bit and why I wouldn't recommend, didn't really recommend the position being taken. Now, typically, I've said before that discretion is something that's really important in trading, and it's important to have good discretion. But you know, good discretion is, I don't know, it's hard to really say what good discretion is because everybody's is different. Their analysis of the market is different. And a trader actually went in and took a position here, right in this area. So he was looking at the market, the candlesticks here. So he was looking at the bullish engulfing candle right here. Now this is not, we're not talking about inside candles here, guys. This is other candles that potentially show a market bounce or a continuation of the trend. And there were two candles that I saw here, 1 and 2, that showed that this could have been a nice place for a nice support for a continued push back up. And I wasn't, even though I thought that there was potential here, I didn't think it was strong enough. And I said this in the thread and in my video before this push even happened on the downside. Now, I could have been really lucky, just saying that, you know, I didn't think that this was strong enough to merit a long position here. But I did say that I didn't feel like the push was enough and it was done yet. And right after that was a news statement that pushed this down in a big way. I did later enter after a big move happened, and I was expecting a pullback. So what happens when there's an abrupt move like this? Usually there's a small pullback, and that's why I entered when I did and waited. I didn't think that from the top to the bottom, considering the volatility with these candles, I didn't think that it was enough, and it wasn't. It was under 100 pips, so it was like 90 pips or something. And if you look back, you'll think that, well, this looks like a really great place to enter in the market, because if you're looking at the trend, you'll see that the trend is on the upside, higher highs, higher lows, and so why not have this be a good place for a trend continuation? Well, that was the problem, is that with so many traders in their mindset with trend trading that they can get caught in situations like this. Now, not to say that I could have been caught as well. In particular, right in this place, in this area where I took a short position, this could have shot way up, and I could have been stuck in a pullback that actually turns into a complete trend change direction, a trend direction change. But the thing is, with when there is a, but I try to minimize these kind of positions. And considering the candlesticks and the liquidity and the volume of the candlesticks, I thought that this was probably a better opportunity than, say, this one here. I know that it's difficult to really say why I would take this position over that position when there are similarities, but I just didn't feel comfortable with this one for some reason. And you can see what happened. It's moved a good 265 or almost 70 pips from that point, which is pretty substantial. But there is, like I said, a good potential for a good hold here and a nice push on the upside from there. So we'll see what happens with the market. And typically, yes, the pound Canadian dollar will look for a larger pullback, and I do think it's coming. So again, we're talking about trend trading and almost trend trading versus counter trend trading in this situation here. Now, I actually got in a debate with a fellow trader about it was a debate about trend trading versus counter trend trading and which is better. He's very much a trend trader and sees the benefits in that. And I used to be a trend trader, and in the last 3 or so years have been pretty much exclusively a counter trend trader. And so he was saying that there are clear reasons why trend trading is better than counter trend trading. And he was saying, well, let's take for example, let's point out the swing levels. Swing highs and swing lows. Okay, so this is clearly moving on the upside, right? From this bracket of time on the in price. Okay. Now the idea that my friend or fellow trader had was that there's much more movement from swing level 1 to swing level 2, and there's much smaller amount of price or pips from swing level 2 to swing level 3, and then there's much larger from swing level 3 to swing level 4. So the idea is, if you're with the larger move, that you'll be able to capture, you have the opportunity or the potential to capture more pips trading with the trend, because from 1 to 2 there's more pips, from 3 to 4 there's more pips, from 5 to 6 there are more pips, and then from 7 to 8 there's the very much larger, because there was a much bigger move from 7 to 8. Although he's correct that there is more movement, more potential for taking pips in these larger moves than compared to these smaller moves, which are here, here, and here. But how much harder is it to take trades with the trend? For example, a lot of the indicators that we use are delayed, or they follow behind price, so they're very slow. So what that causes us to do is enter our trades late, almost all the time, because it's hard to spot when these times are going to happen, when these swing levels happen that are with the trend, these higher lows. It's hard to spot when they're going to actually happen. A lot of people have asked me, so why not just use your strategy, your counter trend trading strategy with the inside candle? Why don't you just use it with the trend? on these levels, at these areas. And my argument is that even though I could do that, it's hard to know how far these are going to go. Is this going to continue? Is this trend going to continue? Because in hindsight, it's much easier to spot a trend. You can spot the levels where it's going to cap out at. But if this was let's say that this is level 1 to level 2 to level 3. Level 3, you can see it had a lot of pips to level 4. But the thing is that because we see in hindsight what happened from level 3 to level 4, it's so easy to spot that this isn't a trend. What if level 3, in real time, when it was actually happening, moved to level 2, and level 2 actually ended up holding, and then this shot back down and broke the level 3 support level? That's when things get a little interesting, because that's what I'm saying, guys, is that you don't know when a trend is happening until it's already over. Because it's hard to spot a trend when it's actually happening. That, yeah, you could say that this could be a bottom out here at level 3, and this could continue shooting up. But I would never take the chance for this for price to break level 2. If I were going to do anything, I would actually take out my profit at level 2. When price hit level 2 again, I would remove and close out for profit, because I don't know if that level is going to hold or not. If it's going to break, if it's going to hold, if it's going to continue down, like I just mentioned. Those are the kind of things. Those are the kind of precautions that you have to take when trading in general, and even with trend trading. That's why I don't like trend trading, is because you have to be too cautious, because you don't know how long that trend is going to continue for. There's no way to really know. That's why I like counter trend better, is because I know that from level 1, from level 2 to level 3, that there is going to be some kind of pullback that happens from here to here. That when the price moves up, and the longer it moves up, the more likely it is to have some kind of pullback. And that's why I trade the way I do, is because I know when those pullbacks may happen. And I've kind of gone through my strategy quite a bit in this video. So I don't want for people to change their trend trading to counter trend trading, because I don't want people to copy what I'm doing and for everybody to do it, because I need those trend traders. I need those traders to continue thinking that trend trading is more powerful or better than counter trend trading. Otherwise, maybe my strategy might not work as well anymore. So it's that idea that counter trend trading can work. Trend trading can too, but you have to be cautious with how you approach both. That it's not just so simple as 1, 2, 3, 4, that price movement from 1 to 2 is larger than price from 2 to 3, and price from 3 to 4 is larger too. That's such a black and white way of painting the picture, where yes, technically there are more pips from 1 to 2 and 3 to 4 than there is from 2 to 3. But can we actually capture those pips with the current tools that we have in trading? Does it make more sense to counter trend trade in the current market, and how price behaves and the personality of the market right now? Think about that a little bit. All right, so that pretty much sums up what I wanted to talk to everybody about today, and just to get you thinking a little bit about, maybe counter trend trading is not better than trend trading, but it should be looked at as just as powerful. Now, to end this, I wrote a message to my I guess fellow trading acquaintance The guy that was constantly talking about why he thought that trend trading was better. Now I'm going to read this to you in my response to him. Now I'm going to call him Blake. It's not his real name. So now I got to be a bit strong here. I got to be a bit strong here, but I think this is what you're looking for. If you're looking at both our MyFX books and check the total pips gained this year in 2017, you will see Blake positive 2,945 total pips from April on. And then me, 3,720 total pips from April on. And I say, Blake, I just don't see why this stuff matters. It's sometimes frustrating that you always try to call a superiority over me and my trading like you somehow know more. I'm always open to ideas, but when someone is very aggressive about what they believe by dumbing down what I do, it's hard to listen. It's not just about what I do, but it's the same thing goes for all traders. I feel like there's something really weird that when a trader is very passionate about their system, it means that they're closed-minded to other ideas. And I'm not closed-minded to other ideas. When somebody says maybe you can do this, it may help you in what you're trying to do with your strategy. That's fine. And suggestions, I'm always open to suggestions. But the problem is when somebody tears down your system first and then offers a suggestion. That's the problem. Where they say, oh, your system sucks, or you have a problem here. Trend trading is better than counter trend trading. You'll never succeed unless you change your system to be more trend-like, or something like that. Instead of saying, oh, in order to capture this amount of pips in your counter trend trading, maybe this is a better suggestion. Because if you're looking for this in your system, maybe this could be beneficial by complementing what you're already trying to achieve in counter trend trading. So you have to be very, I guess, more descriptive of what you're trying to and how you're trying to help somebody. Be more open-minded and not closed-minded to potential ideas, because you may not know best of what of how you're approaching your system. And I agree with that. There's a lot of things that could be done to probably improve the strategy that I have, but I'm constantly thinking of those ideas. And unfortunately, not everybody knows my strategy and how all the workings, the inner outer workings, go in the EA or the strategy. But I'm still open to trying to improve it. But it's important to not bring somebody down while doing so. Maybe I'm a sensitive person. I'm known to be for myself to be a sensitive person with trading, but I also try to be helpful and open-minded to other people's strategies. That's why I've approached this video series in this way, is giving you pieces of the puzzle and not giving you everything in one video, in one how-to video, so you can think on your own and make changes to my strategy in the way that you think works best or better potentially. It doesn't mean that you need to share those things with me or with other people, but it helps you kind of start developing ideas, successful ideas, with already a good foundation. So I ended this message with, you've been a profitable trader just as long as I have. I do have more years of experience, but honestly, that doesn't matter. I put both of us on the same exact level of trading knowledge. Why? Because we're both profitable. That should be the thing, guys, is that why does it matter what somebody else is doing, if it's better or if it's worse, when that person is profitable and you're profitable yourself? I just don't understand. It just becomes like a pissing contest, and at that point, who can piss farther? And it's just not, it doesn't make sense when both traders are profitable to really tear things down in that way. So I just think that we have to pick and choose our battles, and I don't think that this is one where two traders need to argue about, and this includes myself, about if trend trading is better than counter trend trading. We're all allowed to our opinions on this subject, and if you're profitable as a trend trader, then that's great. If you're profitable as a counter trend trader, then that's great as well. And there shouldn't be really any argument there. Alright, so this video has been going on for a while. I'm going on 40 minutes now, so I'm going to end it now. Looks like I just had a trade opened, and this is another short position. Now, the short position is fine. Again, it's with the bigger move, so I don't know how this is going to work out. Again, I'm thinking that this is maybe a more risky setup, but it's still good enough for me to take. I've had two inside candle setups here at this point, one here and then one right after that. And this one was above the RMI, so my expert advisor actually took the position, looking for this to go back on the downside. Now, what I expect here is still a potential move up. So I'm expecting this to go multiple levels here. But there is a chance that it will go back down and hit the 1.6 level again. And if that's the case, let's see if it's enough. Will be enough for me to take profit. It won't be. I need about 50 or 60 pips. So we'll see how market behaves with this current order and see where it goes. All right, guys. Thanks for watching, and I hope this video made sense. And if you have any suggestions, you can let me know, or let the thread know on Forex Factory, and or just keep them to yourself. It's up to you. But if you're a profitable trader and you're just looking for good ideas, then that's all that matters, really. And I hope great success for you, and I hope that this video was helpful. I'll see you guys next time for another update, and hopefully a shorter update. All right, I'll see you later. Bye.